Although you were so early, Larry, in drawing people's attention to inflation and how that would be a stair-step function coming out of COVID, have any of the downside surprises this week impressed you at all?
Not at all. I mean, I believe our inflation numbers that came out this week were an example of lower energy prices. And importantly,
this happens just every day.
Okay, good. New for me. There we go. Lower energy prices, lower car prices. If you look at now, like Carvana, their stock increase, are we over the decline in used car prices? If you look at the home builder stocks, record highs this year. Are we starting to see a renewed activity? As I said, with the IRA, the CHIPS Act, and the Infrastructure Act just starting to hit the J-curve, the demand for workers is going to be extraordinary.
Well, if we were at 6% unemployment, we'd be in terrific shape, be able to handle this. We're at 3.6.
And I think we could go to 3.4, not 3, not 4. And that's why.
That's going to keep wages
much higher.
Jim says it all the time.
And that's why I think interest rates or inflation is going to be stickier. Yeah. And I think we saw a low because of that. I think the next $5 to $10 of energy prices is going to be up, not down. And you talk to the executives in energy, that's what they're saying right now. And so I think we've seen a low in inflation, and I think inflation is going to be sticky between 3 and 4%. And if I'm right about the job creations and the need for labor and what that's going to elevate wages, we're going to be in a period of 3 to 4% interest rates, inflation, which will translate into a Fed that I think is going to be reluctant to turn off their platform of raising rates.
So it doesn't sound like you're counting on a lot of labor displacement from AI and so rises in unemployment.
Ultimately, I actually do believe that will happen, but I don't believe that's happening at any time soon. I think that's a year, 2, 3, 4 years away. I don't see that happening now. AI has huge potential. It is going to increase productivity. It has a lot of potential, but how we adapt it, how we organize ourselves, I don't have the answers yet. I mean, we're all studying it. We're all putting huge teams of people on this, and we all see how we're going to adapt to it. I mean, we're looking at it quite extensively. We have our platform that uses natural language processing already. We look at that. We look at big data analysis, and we're looking at how AI can accelerate that.
I wanted to ask you about energy.
Yeah.
Because we had a deal this week. Exxon buying
Denver.
Loves it.
I mean, listen, it had been something we've been thinking that might happen in terms of carbon capture.
But it's exactly what I've been talking about. Yeah. We have to be working with our energy companies. They own the geology. And what Darren was talking about, now he owns the pipelines that put it into their geology. I think it was a brilliant transaction. We have, at the moment, one of the largest sequestration projects in southern Illinois, Navigator CO2. I mean, this is where I believe we have to be working with energy companies. And this is another example how we have to move aggressively to make sure we have energy security, but at the same time, we have to aggressively move in decarbonization. We are seeing more opportunities in decarbonization, whether it's working in Australia, building the biggest battery storage facility. We're working with a few other governments on those type of projects. We're spending more time working on biofuels to create natural gas.
Yeah.
I mean,
but Larry, when it comes to like ESG, I know that's a dirty word now, whatever we say it is. I think of Exxon, for example. My friend Jeff Ubben is on the board, right? He has a fund basically that's supposed to be focused on the new era of energy.
Yes.
He couldn't raise money in part because he's an Exxon board member. In other words, he got crossed off, and that happens all the time, even though Exxon is actually trying to forge a new future to a certain extent. And obviously, it's important from its business perspective for the future in terms of carbon capture and sequestration.
So in the last 2 years, we saw about $200 billion of added money in our in renewables decarbonization. The money is there. We're seeing it. We're investing in
but
more
are the
renewables.
metrics right? Is it is it working properly in terms of the capital flowing to where it can to actually decarbonize our world in the proper way? Or are certain companies that are associated with fossil fuels, for example, just not on the list?
But I think Darren said it really well. The deal worked because the IRA.
Right.
He also said we're going to have to create efficiencies to make it really profitable to meet their return on equity without the governmental subsidies.
But you're the key here, and one of the keys in deciding where capital should flow in terms of these companies that are doing the right thing in terms of decarbonizing.
He understands the risk of not doing the right thing is horrendous.
First of all, it's our clients' money, and they make the determination where it is. We are seeing more interested parties to invest in decarbonization ever. The key, remember, 2 years ago, the conversation was about divestiture. And we always said, even as much as criticism I got, I always said never divest. Divestiture is a bad thing. We want to be working with these companies alongside. And I think, we're aware of a couple other big projects with other major energy companies. They're going to be moving forward on that, on exactly what Exxon did. And I think this is just the beginning. And that's also a great example of what the IRA is doing to our economy and how it's creating more opportunities. And I think we underestimate the power of the IRA and getting back to what Jim asked related to the difference between the U.S. and the world. We're seeing more foreign companies moving into the United States doing this, whether it's in chemical reengineering or carbon capture, carbon sequestration.